G'day folks, welcome back to Pete's Investing. This is October 19, 2023, and this is a spot gold price update. The weekly, daily and hourly, and it looks like we're in a bit of a bullish movement on all three timelines, so let's drill down for each. On the weekly, first off, you can see here the CCI 150 is broken to the upside, and the price did bounce down off this just about midway or almost at the 61% level of that Fibonacci range, and making further upside in the last couple of weeks and continuing in an uptrend this week as well. On the hourly chart, on the daily chart, we've got this, first off, let's look at this range here. And again, these Fibonacci ranges are a shorter time frame. We had a bearish divergence back here, a couple of bearish divergences, and it broke down and hit our target area. And currently the price is bouncing just off that 61% level of this Fibonacci range. So again, we use the CCI 150 as a divergence indicator, and we use the CCI 400 as excuse for that, and then we look at the CCI 400 as a trend following indicator. So you can see here the CCI 400 is still in a downtrend, although it's broken up through its moving average, and the CCI 150 is broken up through its moving average as well. Now in this shorter time frame here between that range, you can see there it's bounced up and just sitting at this current minor resistance at 1962. That's just short of the 61%. So to be more bullish, we need to see it break above that 61%, above this minor resistance, and approaching then this major resistance at 2082. Of course, you could always bounce down from there, so there's no guarantee, but that's where we are on the daily. On the hourly, okay, we had a couple of again, I'll keep these divergence with these little rectangles drawn where the targets have been hit, and where they fail, I mark them with an X. So you can see there that failed. You could argue that probably just kissed that divergence range. That would have been a 23-38% between that Fibonacci range. But I've marked it as a cross just to be fair. Now, we've got a second, currently we've got a bearish divergence playing out on the hour chart. You can see there the CCI is breaking to the downside versus the price making new highs. So we expect it to break down and hit our closest Fibonacci range. So if we draw a Fibonacci between that low and that high, then we're going to set a target between the 23% and the 38% level. That'll be our initial target area for it to break down. Of course, for this divergence to fail, we need to see CCI start breaking higher than that entry point, and then by that stage we'll also see the price move higher as well. So that's where we are at the moment. Short term, we're looking at bullishness, although a bit of a retrace to the downside at least. And again, it doesn't mean it's going to break down dramatically. It just could be in a little bit of a retrace before bouncing up to the upside again. So overall, bullish on the weekly, slightly bullish, breaking above to the bullish movement on the daily, and bullish on the hourly, although there might be a bit of a retrace to the downside in the short term. Just be mindful of that before going long. I'd wait for this to break to the upside and above this resistance before taking any long positions. So just hopefully you understand the divergence strategy as well as the trend following strategy. That's how we're looking at trading the gold and other indices as well. So if you got value out of the video, hit that subscribe and the like button, hit that notification bell. Thanks for watching, and see you in a future video.